In December of 2008, Elon Musk was borrowing money from friends to cover his rent. His rocket company had failed to reach orbit 3 times in a row. The cash was almost gone. 18 years later, that same company went public in the largest IPO in history, valued at $1.77 trillion. Then, in 8 weeks, it lost more than $1 trillion of that value, and it still hasn't turned a profit. This is a company that has spent its entire existence one bad quarter, or one failed launch, from disaster. In some ways, it still is. Elon Musk founded SpaceX in 2002, months after eBay bought PayPal and made him rich. He put roughly $100 million of his own money in, no rockets, no launch history, no real reason on paper to succeed. He gave himself a budget, 3 attempts at Falcon 1, SpaceX's first rocket. Nothing more. The first attempt, March 2006, exploded 30 seconds after liftoff. The second, March 2007, still failed to reach orbit. Publicly, SpaceX looked like a long shot backed by a wealthy founder. Privately, it was down to its final chance. Right as the global financial crisis hit, there's a phone call at the center of this story. One that, in December 2008, decided whether SpaceX would exist in 2009. By August 3, 2008, SpaceX had 1 attempt left. The third Falcon 1 launch lifted off, looked routine for a moment, then broke apart when its stages collided during separation. On board was a satellite, and the cremated remains of 208 people, including actor James Doohan, who played Scotty on Star Trek. Musk had budgeted for exactly 3 launches. This was the third, and no bank was in a lending mood during a global credit crisis. Musk reportedly borrowed money from friends to cover his own rent. What kept SpaceX alive wasn't a bank. It was a group of former PayPal colleagues, some of the same people who, years earlier, had forced Musk out as PayPal's CEO, who put money in for one more attempt. The people who once pushed him out of his last company ended up saving his next one. The 4th launch, September 28, 2008, worked. Falcon 1 became the first privately built, liquid-fueled rocket to reach Earth orbit. Proof of concept, nothing more. Then, on December 23, 2008, NASA called. Out of 21 bidders, it selected SpaceX for a $1.6 billion contract to fly cargo to the International Space Station. According to a former SpaceX executive's later account, Musk's reaction was simple: "I love you guys." A man sounding, by every account, like he'd just been told his company wasn't going to die. Without that contract, there's no Falcon 9, no crewed flights, no $1.77 trillion IPO. Just a failed rocket company nobody remembers. Surviving 2008 didn't end the danger, it changed shape. By 2010, Falcon 9 was flying. SpaceX spent years failing to land its boosters for reuse before getting it right. Musk reportedly pledged his own fortune to keep that program funded through the failures. By May 2020, SpaceX became the first private company to fly NASA astronauts to the ISS. Here's the part most people miss. 2008 wasn't a one-time near-death experience. In November 2021, Musk sent staff an internal memo warning of a genuine risk of bankruptcy if SpaceX couldn't speed up engine production for Starship, calling the crisis much worse than it had seemed a few weeks ago. 13 years after the first collapse, he was warning employees it could happen again. SpaceX's survival was never one dramatic rescue followed by permanent safety. It kept betting everything, recovering, and betting everything again at a bigger scale each time. The biggest bet was still coming. By December 2025, SpaceX was preparing to go public, valued at $800 billion in private sales. In February 2026, Musk merged SpaceX with his AI company, xAI, creating a combined entity worth $1.25 trillion, folding a new capital-hungry business line into the rocket company. That business line is exactly what would tank the stock 5 months later. Final IPO pricing on June 11 valued SpaceX at $1. $77 trillion, 7th most valuable public company in America, ahead of Tesla, with Musk keeping over 82% voting control. His own stake was reported worth $866.5 billion at that price, which, combined with his Tesla holdings, made him, on paper, the world's first trillionaire. SpaceX went public June 12. Stock opened around $150, closed near $161, up 19% from the $135 IPO price, largest IPO in history, ahead of Saudi Aramco. Shares climbed another 20% the next trading day, pushing market cap past $2 trillion. Within days, the stock hit an all-time high of $2 a little. Around then, Musk posted that SpaceX might be able to reach approximately $1 trillion in revenue by 2030. Within 8 weeks, the market would erase more than that from its actual valuation. On August 4, the first earnings report as a public company. Revenue $7.81 billion, up 92% year over year, beating estimates by nearly $1 billion. Net loss narrowed to $541 from $1 billion a year earlier. AI segment revenue up 247%. The stock fell 8% anyway. Investors weren't looking at the beat, they were looking at the spending. Capital expenditure, money spent building things before they generate any return, hit $18.4 billion for the quarter, $15.8 billion from the AI segment alone. First half CapEx totaled $28.5 billion, nearly the size of the entire prior record IPO spent in 6 months. A day or two later, an insider lockup expiry let early investors and employees sell shares for the first time, adding pressure right when confidence was cracking. Not a conspiracy, a calendar. It just didn't help. By mid-August, the stock had fallen from $211 to roughly $107, nearly 50%. Over $1 trillion erased in under 2 months, NPR's June headline, SpaceX blasts off with record-breaking IPO. By August, SpaceX's once soaring stock price drifts back to earth. Same outlet, same company, 8 weeks apart. Here's the assumption this story breaks, that reaching record scale means graduating out of risk, that 2008, 3 failures and rent money borrowed from friends was a starting line problem, solved for good by success. It wasn't. SpaceX beat revenue estimates by nearly $1 billion and still fell 8% because the market was grading the $28. $5 billion spent on an unproven AI bet. A reasonable thing to care about, even when the core business is growing exactly as promised. Scale didn't remove the risk. It relocated it from can this rocket reach orbit to can this spending turn into revenue before investors run out of patience. That's the same mechanism behind nearly every company that IPOs at a record valuation and gets punished for spending on the exact thing it said would justify it. For anyone with SpaceX exposure through a retirement account or index fund, the lesson isn't to panic over an 8% drop. It's to notice what actually moved the stock, not bad news. Spending that outrants patience. So how does a company that survived near bankruptcy end up losing $1 trillion during what should have been its victory lap? Because surviving 2008 never made SpaceX a safe bet. It made it a company willing to keep making the same size of bet over and over at a larger scale each time. Now, the market prices that risk in public every quarter. 18 years ago, SpaceX had 1 rocket left before it disappeared. A phone call from NASA and former colleagues who'd once pushed Musk out of his own company kept it alive. Today, SpaceX is worth over $800 billion less than it was 2 months ago and still hasn't turned a profit. The full reasoning behind everyone who sold in early August has never been made public. It likely never will be. The company that finally conquered orbit still hasn't conquered risk.